Welcome back to Teshkid FX for another Polygon Matic price prediction update, and in this video I'll be giving you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot structures and the Fibonacci's, and allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening, where you can see that Polygon Matic, from these low prices that we had been trading within, we saw a very nice bounce to the upside, making it to an all-time high at around the $2.9 mark. And after seeing the all-time high, we started the bear market in this ABC corrective structure, which took us back to around the $0.32 mark. And in that movement to the lower side, I'm terming it as a higher Elliott wave count 2 to the lower side, and there are chances that we might have seen the low for that second wave, and we might have started that bounce to the upside in the formation of these higher Elliott wave count 3 to the upside, and sketching out a minimum target area to the upside in the formation of these wave 3 using a trend based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $4.98 mark, and that is my long-term scenario that I'm expecting to play out here on the Polygon Matic chart. And also in the formation of that wave 3, which is an impulsive wave, I will also expect to see fractal waves in formation within that higher Elliott wave count 3, having the wave 5 of that fractal wave completing the formation of that higher Elliott wave count 3 to the upside. And also jumping to the forward chart for further analysis. Here on the forward chart, you can see I have this Elliott wave structure in blue, which is a fractal wave within the formation of that higher Elliott wave count 3 to the upside, where I believe we have completed the formation of that first wave to the upside. And because the first wave to the upside is an impulsive wave, I also expected to see fractal waves in formation within that wave 1, where you can see I have represented that impulsive nature in this fractal wave in yellow, having the wave 5 completing the first wave to the upside and making our peak at around the $1.3 mark. And now my primary scenario is that we're in the formation of a second wave, which is a corrective wave, and because of its corrective nature, we also expect to see an ABC corrective structure. And there are two ways that we can have that ABC corrective structure here on the Polygon Matic chart, and this is the most valid ABC corrective structure before I get into the other ABC corrective structure, and this is what is going to give us the short-term scenarios that I'm expecting to play out. So we saw this movement to the lower side in the formation of that wave A, then I was expecting a bit of a bounce to the upside in the formation of that wave B, which I expected to retrace between the area at around the $1.09 mark and the $0.97 mark, and that I was basing it on the Fibonacci's, connecting them from the high of that wave A to the low of that wave A. And this target area in red lies between the fib level 0.618 and the fib level 0.382, and we did not fully maximize that target area to the upside in the formation of this wave B, but made a peak at around the $0.94 mark, and there are chances that that might be the peak for that wave B, and whatever we are seeing right here might be that impulsive movement to the lower side in the formation of this wave C to the lower side. And because of its impulsive nature, we also expect to see a 5-wave structure in the formation of that wave C, where I believe this might be the first wave to the lower side, and there are chances that we might have made the low for that first wave. And now my primary scenario is that we might be in the formation of a second wave before we see that wave 3, then expect a wave 4 and then a wave 5, which should fully maximize the formation of that wave C and also fully maximize the formation of that higher Elliott wave count 2 to the lower side. And getting a little bit into this Elliott wave structure that I have right here in the formation of this wave C, so that it can give us the short-term scenarios and also give you some short-term scenarios basing it on the key areas of support and resistances that we have right here. There are chances that we might be in the formation of this second wave, and sketching out a minimum target area to the upside in the formation of this wave 2 using the Fibonacci's, connecting them from the high of that wave 1 to the low of the wave 1. That gives me a minimum retracement area to the upside in the formation of this second wave between the fib level 0.5 and the fib level 0.618, and I can mark that target area, which perfectly lies between the $0.87 mark and the $0.85 mark. That has been my primary scenario, that we might get a bit of a bounce to the upside, fully maximize this target area before we see that movement to the lower side in the formation of that wave 3. But from what we are seeing, basing it on the key areas of support and resistances, you can see we have lost the key area of support at around the $0.78 mark, and also lost the 20-day MA here on the forward chart, and that means we don't have support for us to give to have that pump to the upside in in the formation of this second wave, and there are chances that we might make one more low in what we might term as the low for that higher Elliott wave count 1 to the lower side. So there are chances that in case we continue losing this key area of support and maybe even see a retest of the key area of support at around the $0.78 mark, and once that happens we continue pushing a little bit lower and make a new low. In case that happens, then I'll have to restructure my Elliott wave count, having the new low as the low for this wave 1 to the lower side, then expect a bit of a bounce to the upside in the formation of this second wave. But for now, I still have hope in the formation of this second wave, and there are chances that we might have the support of the $0.78 mark because we have not fully lost it, and get a bit of a bounce to the upside, manage to get above the 20-day MA once more, which will be giving us support by then. Once we manage to break above it, continue pushing even higher and get fully into this target area in the formation of that second wave before we see that wave 3, then expect a wave 4 and then a wave 5 to the lower side to complete the formation of that higher Elliott wave count 2 to the lower side. The other ABC corrective structure that can play out is having this as the wave A, where we have the wave A making its low at around the $0.78 mark, then the wave B making its peak at around the $1.17 mark, and whatever we are seeing over here might be the formation of that wave C, which might come to a completion once we see a straight sell-off the moment we lose the key area of support at around the $0.78 mark. So let's be patient and see how that plays out, but the most likely ABC corrective structure is this ABC corrective structure right here, having the wave B making its peak at around the $0.94 mark, and whatever we are seeing over here might be the formation of that wave C to the lower side. Also taking a look at the indicators to see what movements will be supported. On the RSI we are trading at around the 34 mark, meaning we have massive room for us to support any movements to the upper side. Also taking a look at the MACD, on the MACD we have printed a bearish cross, and that means lower prices are coming our way. So let's be patient and see how that plays out. And that's the update for Polygon Matic. And if you like the video, make sure that you give me a thumbs up, subscribe to the channel, and also check out the channel membership.